Hey everybody, hope you're all doing well. In this video, we're going to be breaking down how to trade the dreaded all-time highs. It's probably something that might be beating a lot of you guys up, but by the end of this video, with the framework and the fundamentals I'm going to share with you that I've been using in my own trading, you're going to realize that these are actually some of the easiest and most predictable price conditions to trade in. I'm coming off the end of an undefeated week with wins on Monday, Thursday, and Friday, all traded live in my Discord. If you guys are interested in that, you can check out the link in bio. But I'm going to be breaking down some of the trades that I've taken this week and how all-time highs has actually made taking those trades a lot easier. Okay, so let's break it down right now. And it all comes down to a really simple understanding of external liquidity to internal liquidity to external liquidity. It's something you guys might have heard before. Let's actually break it down because this concept makes trading all-time highs like infinitely easier. Okay, and let's also break down a couple misconceptions. Trading all-time highs does not mean going long after we put in a new all-time high and trading the abyss. No, trading all-time highs is trading the framework and the narrative that these really great draws on liquidity are, the opportunities that they're going to give you in the market, right? So let's break this down. External liquidity. This is, well, as the name states, the external liquidity of your range. In this case, it's all-time highs, right? These are going to be the levels in the market that we're leaving behind when we target internal liquidity to rebalance. Okay, internal liquidity can be the internal manipulations we have within the price leg that left behind your external liquidity, such as rebalancing to your fair value gaps, which is something I'm going to show you later. Even just showing signatures of a manipulation beneath these all-time highs to show a signature of a rebalance to then distribute back up to our external resting liquidity, and then the cycle repeats, ERL, IRL, ERL, IRL, right? And it's easier said than done drawing out a silly little chart like this, but I'm going to be breaking this down, and you're going to be seeing that it's not too far off from this actual drawing and how price is rebalancing, redistributing to these external highs, rebalancing to internal liquidity, redistributing to all-time highs, okay? So let's break this down on a live chart. This is, again, I'm not here to draw out silly little drawings and act like everything is perfect in hindsight. Let's actually break down some real chart examples that I took live in front of my students, and you're going to see and you're going to understand what it means to trade ERL, IRL, and how all-time highs offer literally the best market structure, right? Like literally starting off on the high time frame, this sketch isn't even that far-fetched. We're literally trading the cleanest higher highs, lower highs, higher highs, lower highs, higher highs, lower highs. It literally looks like a fake drawing, kind of like this. And that's because that's the price action that all-time highs offers, okay? So let's break this down by understanding what levels are we looking for our internal rebalances, okay? And starting off, what's our draw on liquidity? All-time highs. As I mentioned earlier, we're not trying to trade above all-time highs for longs. We're not just going to full port longs. Look at this price action. Look what happens when we reclaim all-time highs. Does this look like good price action to try and go long in? No. You can anticipate the rebalance. External liquidity, we've taken out these new all-time highs. We're going to rebalance and we are going to redistribute to those external, or the external resting liquidity, the ERL, and we're going to, once again, repeat, rebalance, redistribute to those highs. The freest cycle and the freest draws on liquidity in the market, right? So let's take a look at an actual example of how you can frame a trade from internal resting liquidity to external resting liquidity or your all-time highs. And again, these highs are the freest draws on liquidity. It's not even funny. You guys are overcomplicating. You're getting beat up over, the easiest price action to trade. Okay, so first of all, let's look at the swing low here. You always have to understand, or how I view trading, is that you always want to anticipate distribution towards a draw on liquidity by identifying your manipulation. Manipulation stems this distribution. How are we going to find that manipulation, and how are we going to even frame a narrative to know that we're ready to redistribute to these external highs and that we've actually efficiently rebalance and had a proper IRL to ERL move, and that we're not just going to continue to sell off lower? And that is, well, it's just the foundation of my three-step distribution model. High time frame key levels. You guys can check out my other content on this as well, but I trade primarily with high time frame levels like session liquidity, swing highs and lows, previous day highs and lows, really just significant swing points and areas of liquidity in the market paired with an SMT divergence, right? So if we look at this example here, we start off this swing low and we identify this area of manipulation by sweeping out and having a really strong manipulation, sweeping out our London session low and putting in an SMT at the previous week low with ES, right? That's the start of this IRL to ERL move. We've rebalanced price efficiently. Now, of course, this is on the high time frame. It's super easy, and again, I try not to just use hindsight. We're going to get into some real trades that I've taken, but it's really easy to look back and say, great, this started the move. Now what? How do we actually capitalize on this intraday and fractalize an entry down to the 1 minute? Well, we can literally trade our normal times, like 9:30 opens, key time opens, which are all concepts tied into my three-step model, which I have videos on. But let's take a look at this example, right? So just taking a good look at high time frame, we notice we've had a really clean manipulation, really clean draw on liquidity, of course, because your all-time highs and your ERL, just free draw on liquidity, free TP, okay? How do we actually execute this intraday? Well, let's take a look at the 9:30 open. Coincidentally, guess what? A lot of these IRL to ERL moves in the distributions where we actually hit the target of our all-time highs occurs during the 9:30 open. Very coincidentally, I know, right? But let's break down how we actually capture an entry with this. And this is going to be framed using this IRL to ERL and also the foundation of my three-step model. Super simple, same exact thing. We are looking for high time frame areas of liquidity, or IRL in this example. We have a nice resting hourly gap here, as well as a swing low, and then we have London session highs, our all-time highs, internal, external, internal, external. All of these things are going to be aligned, and we're going to just take a nice simple long out of our 9:30 volatility injection to our all-time highs. Okay, so this 9:30 in this example, 9:30 opens, we immediately rebalance into our hourly gap, putting in a key level SMT. If we look at ES here, you're going to notice that we do not sweep out the same low that NQ does. Beautiful. High time frame manipulation that aligns with our initial narrative from what we can assume to be the low of week, right? And again, we don't have to, look back at this and be like, oh, hindsight, perfect. We can, apply this live time. We've aligned this narrative in this protected low with a 9:30 open manipulation. Again, it's all about fractalizing and aligning our narratives in our draws on liquidity. It's never been easier at all-time highs, right? It's never been easier. So how do we actually enter a trade now that we understand how we framed a high time frame narrative and how we've understood that we're ready to distribute and complete this IRL to ERL cycle? Well, we can just look for an internal entry model, okay? Step one, high time frame key level SMT. For those of you who are familiar with my three-step distribution model, that's literally just how, again, we're fractalizing and aligning these narratives to find swing points and areas of manipulation to anticipate when the market is actually ready to distribute to our draws on liquidity. 9:30 opens, we have a very clean move down into this hourly gap, as well as sweeping out internal resting liquidity, and then we have a nice V-shaped delivery out of that manipulation. Super simple, okay? 9:30 open, key level SMT, change in state of delivery. Doesn't have to be any more complicated than that. Take longs out of this change in state, and again, let's not act like this is hindsight here. This is a trade I took live in my Discord, because these are real live time applicable scenarios and concepts entered at the change in state, and we beautifully distribute to our draw on liquidity being all-time highs. Simple, guys. We leave this resting external high or our all-time high, we rebalance internally, show a signature in price of a reversal, and then we trade the continuation just at a normal 9:30 open. Super simple, okay? Internal rebalance targeting the external draw. Nothing else. And then of course we just align this with our normal entry model in the criteria for the 3-step model. Now what happens when we hit these all-time highs? Well, guess what? This is where a lot of you guys are probably getting fried. We're not trying to trade longs into the abyss here. Okay, it's a common misconception. You think we're just going to rip at all-time highs and just rocket, rocket, rocket. No. Does this look like a good price action to be trading in? Absolutely not. Our goal is to trade the framework of the all-time highs, not to actually quite literally trade the all-time highs. What can we take away from once we put in an all-time high? What have we been doing for the past however many days or weeks that we've been trading at all-time highs? We now need to rebalance once we've put in and targeted our external liquidity. We need to rebalance from that price leg that we've distributed from. You starting to see where I'm getting at now? We don't have to try and catch and trade a standard deviation and try and catch random longs with no setup just because we're at all-time highs. We know we're going to do what now? We're going to go from external resting liquidity to internal resting liquidity. We have unmitigated gaps from a very big distribution. We don't want to get caught in the reaccumulation. We want to trade the framework of this ERL to IRL at all-time highs. So simple. Okay, you're literally just following the narrative. You're not actually trading the all-time highs. The narrative which the all-time highs create is insanely clear. So this is our trade from today. Again, let me not just talk about how great and how obvious everything is. Let me back it up. Let's run through the trade that I took live today in my Discord. Same exact thing. We align our manipulation, and same exact thing. You want to use the same exact criteria to identify your manipulation so that you can time and fractalize the distribution for these rebalances, because you don't just want to be blindly firing off trades from fair value gaps to your external liquidity or from external liquidity to your fair value gaps. You want to be, you want to time them. Again, when does this coincidentally happen? 9:30 a.m. price opens, and today was a little weird. At 9:28, volume kicked in, and we swept out those all-time highs with an SMT. Pretty funny, but still offered a trade. I took this SMT in this sweep of liquidity because it was it's the move that actually occurred after 9:30 open. Same thing. We identify our criteria as our key level and SMT to find this protected area and what should be a manipulation to trade the rebalance, external liquidity to internal liquidity. Okay, we take shorts here, stop at the high of what should be our volatility injection at 9:30. And what we did is that you should manage your positions when we tap these gaps, obviously. But today, we pretty much just traded to the consequent encroachment of the 4-hour fair value gap, because that overlined with this hourly gap. So guess what happens, guys? Shocker. IRL to ERL. And what can we anticipate about price going forward for next week, guys? What have we just left behind? Hint, an all-time high. Am I saying we're immediately going to rebalance from this gap to this high? Probably not. But we want to look for our signatures in price on our high time frame for when we're going to be starting this manipulative move to confirm that the low of our rebalance has been put in, so we can anticipate and catch the continuation for our longs to our ERL or our all-time highs, right? You would think this is made up. Like if you draw out a chart, lower highs, higher lows, whatever it may be, you think that's fake and you think that's only drawn out in examples like this. All-time highs actually offers real-time setups exactly like this. And this isn't just for this week or just for today, right? Let's take a look back at what happens the last time we hit our all-time highs. What do we do? And at what time does it happen? Again, coincidentally, at our 10 a.m. open on Wednesday, last Wednesday. Sorry, that key level's a little messed up, but you'll know that's the sweep of the all-time high. What do? External liquidity is taken, rebalance and sell off targeting internal resting liquidity. And then we just cycle. Okay? So I hope with this new understanding of really the simple market structure that all-time highs is going to offer for you, that you've rewired your brain to the type of setups you're going to look for and the narratives and what you can be looking for to actually catch and anticipate these signatures in price and when they're going to occur. Obviously, I didn't go too in depth into the three-step model itself and how I'm catching and aligning timeframes and fractalizing everything. Please go check out my other YouTube videos. Like I said, I trade live in my Discord. If you want some more education and you want to ask all your questions, you can join for a free trial with the link in my bio. But this new perception of all-time highs, you're going to be like, dang, I really wish for the past 2 weeks I had this. But you now have this new perspective to trade with. Go get your payouts, go get your funded accounts, run up your live accounts, whatever it is. You now know how easy the markets are. And yeah, leave any feedback and questions in the comments and I'll get back to you guys. Thanks for watching.